Let's start with a bold truth. Your home can be your greatest liability, or your greatest asset. In 2025, the rules of real estate have shifted. Rising rents, flexible work arrangements, and creative financing options have opened the door to a strategy that's both powerful and accessible: house hacking. But this isn't just a guide. It's a playbook. A strategic, step-by-step manual designed to help you acquire property with little to no money down, live for free, and build long-term wealth. Whether you're a broke college grad, a savvy investor, or someone tired of paying rent, this playbook is your blueprint. What is house hacking, really? House hacking is the practice of turning your primary residence into an income-generating asset. You live in part of the property and rent out the rest. The rent pays your mortgage, and ideally, you pocket some profit. Popular house hacking models: multifamily units, live in one unit, rent out the others. Single-family homes with roommates, rent out spare bedrooms. ADUs, accessory dwelling units, convert garages or basements. Short-term rentals, Airbnb a room or unit. Live-in flips, renovate while living there, then sell for profit. The beauty of house hacking is that it blends lifestyle and investment. You're not just buying a home, you're buying a business. Why 2025 is the golden era for house hacking? Let's talk timing. Why is 2025 the perfect year to house hack? 1. Creative financing is booming. From FHA to VA to DSCR loans, lenders are offering more flexible options than ever. You don't need 20% down anymore. 2. Remote work equals location freedom. You're no longer tied to expensive urban centers. You can house hack in affordable markets and still keep your job. 3. Rents are rising. Rental demand is high, especially in cities with housing shortages. That means better cash flow. 4. Tech makes it easy. Apps like Zillow, Rentometer, and Turbo Tenants simplify everything from finding deals to screening tenants. The mindset shift, from renter to investor. Before you buy anything, you need to shift your mindset. House hacking isn't just a financial move, it's a lifestyle change. You're no longer just a tenant. You're a landlord, a strategist, and a wealth builder. Every decision, from property selection to tenant screening, should be made with ROI in mind. Bank Chapter 5. How to get a property with $0 down. Yes, it's possible. Here's how. 1. Government-backed loans. FHA loans. 3.5% down, but you can use gift funds or down payment assistance. VA loans. 0% down for veterans. USDA loans. 0% down for rural properties. 2. Down payment assistance programs. Local and state programs offer grants or forgivable loans. Examples include CalFA, California, TSAHC, Texas, Georgia Dream, Florida Housing Finance Corporation. 3. Seller financing. Negotiate directly with the seller. Often no bank involved, flexible terms, and sometimes no down payment. 4. House hack with a partner. Split the down payment and responsibilities. Use a joint venture agreement to protect both parties. 5. Use HELOC or personal loans. Tap into existing equity or unsecured credit. Riskier, but doable with strong cash flow. How to choose the right property. Not all homes are house hackable. Here's what to look for. Key criteria: multi-unit potential, separate entrances, zoning laws that allow rentals, proximity to public transport or universities, low property taxes and insurance costs. Red flags: WA restrictions, high crime areas, poor school districts, affects resale value. Deferred maintenance. Crunching the numbers, a sample deal. Let's break down a sample deal. Property price, $350,000, loan type, FHA, 3.5% down. Down payment, $12,250, covered by assistance. Monthly mortgage, $2,100, rent from tenants, $1,800, net housing cost, $300 per month. You're living in a $350,000 asset for $300 per month while building equity. Over 5 years, you could build $50,000 plus in equity and save $100,000 plus in rent. Renovation and value add strategies. Want to boost rent and equity? Try these. Add a bedroom or bathroom, convert garage to studio, install laundry units, upgrade kitchens and flooring. Add solar panels or smart home tech. These improvements can increase rent by 10 to 30% and add tens of thousands in value. Scaling your portfolio. Once you've hacked your first house, rinse and repeat. Tips. Refinance and pool equity. Use BRRRR strategy: buy, rehab, rent, refinance. Repeat. Move every 12 months to qualify for owner-occupied loans again. Use LLCs and trusts to protect assets. Tools and resources you'll need. Zillow and Redfin. Property search, rentometer, rent estimates, bigger pockets, community and calculators, turbo tenant, lease and tenant management, Roofstock. Buy rental properties remotely, deal check. Analyze investment deals, Stessa. Track income and expenses. Tenant management tips. Managing tenants is part art, part science. Best practices. Screen thoroughly, credit, income, references. Use leases with clear terms, automate rent collection, be responsive but firm, document everything. Tools. Cozy, avail, buildium. Common pitfalls to avoid. Underestimating expenses, choosing bad tenants, ignoring local laws, overleveraging with debt, not having reserves, poor communication. Your 2025 house hacking blueprint. 1. Educate yourself. 2. Get pre-approved. 3. Find a house-hackable property. 4. Use creative financing. 5. Rent strategically. 6. Manage like a pro. 7. Scale smartly. Real stories from real hackers. I bought a triplex in Atlanta with an FHA loan and lived in one unit. The other 2 paid my mortgage. I now own 4 properties. Marcus J. I used a USDA loan to buy a duplex in a rural town. 0 down. I Airbnb one side and live in the other. Priya S. I partnered with a friend, split the down payment, and bought a fourplex. We live in one unit and rent the rest. It's our first step toward financial freedom. Daniel and Kim. The psychology of wealth building. House hacking isn't just about money, it's about freedom. It's about reclaiming control over your financial future. It's about building something that lasts. The most successful house hackers treat their homes like businesses. They track expenses, optimize income, and reinvest profits. They don't just live, they leverage. Final thoughts: your home is your first business. In 2025, house hacking is more than a trend, it's a movement. With the right strategy, mindset, and tools, you can own property with $0 down, live for free, and build generational wealth.